Question 1. Fundamental concepts of insurance. What is the primary purpose of the principle of indemnity in an insurance contract? A. To provide a profit to the insured after a loss. B. To restore the insured to their financial position prior to the loss. C. To allow for the replacement of the insured property with new property. D. To encourage the insured to take greater risks. Answer. B. To restore the insured to their financial position prior to the loss. Explanation. The principle of indemnity is fundamental in insurance, ensuring that the insured is compensated for their loss without profiting from it. According to this principle, the insured should be restored to the financial position they were in before the loss occurred, thus preventing them from making a profit from the insurance claim. This principle discourages moral hazard, where individuals may take excessive risks if they know they will be compensated beyond their actual loss. The concept is outlined in Pennsylvania law, where policies must adhere to the indemnity principle to promote fair and ethical practices in insurance. Question 2. Claims handling process. Which of the following best describes the steps involved in the claims handling process after an insured event occurs? A. Immediate payment, investigation, and then denial of the claim. B. Investigation, evaluation, settlement, and possible denial. C. Claim submission, instant approval and payment. D. Denial of claims, investigation, and then filing for arbitration. Answer. B. Investigation, evaluation, settlement, and possible denial. Explanation. The claims handling process is a structured sequence of actions that begins after an insured event occurs. The initial step involves the investigation of the claim, where the insurance company collects relevant information and evidence regarding the loss. Following the investigation, the evaluation phase assesses the validity of the claim and determines the appropriate compensation based on the policy terms. The insurer then proceeds to settlement, offering payment to the insured if the claim is deemed valid. If the claim does not meet the policy's coverage criteria, it may be denied. This process is governed by various consumer protection laws in Pennsylvania, which require insurers to act in good faith and provide transparency throughout the claims handling process. Question 3. Scenario-based question on casualty insurance basics. Mr. Smith, a small business owner in Pennsylvania, has a general liability insurance policy for his bakery. One day, a customer slips and falls on a wet floor inside the store, sustaining injuries. What should Mr. Smith do first after the incident? A. Immediately offer the customer a cash settlement to avoid legal issues. B. Call his insurance agent to report the incident and gather facts. C. Wait to see if the customer files a lawsuit before taking any action. D. Clean up the area and ensure no one else gets hurt before reporting the incident. Answer. B. Call his insurance agent to report the incident and gather facts. Explanation. In the event of a liability incident such as a customer injury, it is critical for Mr. Smith to promptly report the incident to his insurance agent. This ensures that the insurance company can initiate the claims process and provide necessary guidance. The agent will assist in gathering relevant facts about the incident, which is crucial for any future claims. Immediate cash settlements can complicate liability matters and could potentially undermine coverage. Waiting for a lawsuit or focusing solely on cleanup before reporting can lead to complications, as timely reporting is often required by insurance contracts to avoid coverage issues. This aligns with best practices in risk management and is a key responsibility outlined in liability insurance policies. Question 4. Specific types of casualty insurance. Which of the following is a key distinction between occurrence and claims-made policies in professional liability insurance? A. Occurrence policies cover claims filed within the policy period, while claims-made policies cover incidents that occurred during the policy period. B. Claims-made policies cover claims made during the policy period regardless of when the incident occurred, while occurrence policies cover incidents that occurred during the policy period regardless of when the claim is made. C. Occurrence policies have no expiration, while claims-made policies are always renewable. D. Claims-made policies offer broader coverage than occurrence policies. Answer. B. Claims-made policies cover claims made during the policy period regardless of when the incident occurred, while occurrence policies cover incidents that occurred during the policy period regardless of when the claim is made. Explanation. The distinction between occurrence and claims-made policies is critical in understanding professional liability insurance. An occurrence policy provides coverage for incidents that happen during the policy term, regardless of when the claim is reported. Conversely, a claims-made policy only covers claims that are made during the policy period, regardless of when the event leading to the claim occurred. This distinction affects how coverage is maintained and the potential for gaps in protection, especially when changing insurers. Understanding this difference is essential for policyholders to ensure they have appropriate coverage for their professional activities. Question 5. Legal principles affecting insurance. Which legal concept describes a situation where an insurance company denies coverage based on the insured's failure to disclose relevant information during the application process? A. Waiver. B. Estoppel. C. Misrepresentation. D. Adverse selection. Answer. C. Misrepresentation. Explanation. Misrepresentation occurs when an insured fails to disclose material facts or provides false information during the application for insurance. If this misrepresentation is significant enough to affect the insurer's decision to underwrite the policy, the insurer may deny coverage based on this principle. Pennsylvania law emphasizes the duty of the insured to disclose all relevant information, and failure to do so can lead to voiding the policy. This concept is crucial in the context of contract law, as it highlights the importance of honest communication between insurers and policyholders. Question 6. Consumer rights and responsibilities. Under Pennsylvania law, what is the maximum time frame in which an insurance company must acknowledge receipt of a claim? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer. B. 15 days. Explanation. Pennsylvania law requires insurance companies to acknowledge receipt of a claim within 15 days of receiving the claim. This requirement is part of consumer protection measures to ensure timely communication and processing of claims. Insurers must also provide an explanation if a claim is denied. These regulations are designed to promote transparency and protect consumers from unfair practices in the claims handling process. Question 7. Ethics in insurance. Which of the following actions would most likely constitute a breach of ethical responsibilities by an insurance agent? A. Providing accurate information about policy options to clients. B. Encouraging clients to review their policies annually. C. Offering gifts to clients in exchange for referrals. D. Advising clients on appropriate coverage limits. Answer. C. Offering gifts to clients in exchange for referrals. Explanation. Offering gifts or incentives to clients in exchange for referrals is considered unethical and can violate regulations regarding fair treatment of clients. Ethical responsibilities require insurance professionals to act in the best interest of their clients, maintaining transparency and integrity in their dealings. In Pennsylvania, agents must adhere to strict ethical standards to promote trust and protect consumer interests. Violating these standards can result in disciplinary action and damage to the agent's reputation. Question 8. Regulatory environment. Which of the following is not a function of the Pennsylvania Insurance Department? A. Regulating the licensing of insurance agents and companies. B. Setting the premium rates for all insurance policies. C. Enforcing compliance with state insurance laws. D. Protecting consumer rights related to insurance contracts. Answer. B. Setting the premium rates for all insurance policies. Explanation. The Pennsylvania Insurance Department plays a significant role in regulating the insurance industry, including licensing agents and companies, enforcing compliance with laws, and protecting consumer rights. However, it does not directly set premium rates for all insurance policies. Instead, insurers generally determine their own rates based on market competition, underwriting guidelines, and regulatory requirements. The department may review rates for certain types of insurance to ensure they are not discriminatory or unfair, but it does not dictate prices across the board. Question 9. Insurance, pricing and premiums. What is the primary factor that influences the determination of an insurance premium? A. The insured's geographical location only. B. The claims history and risk profile of the insured. C. The advertising budget of the insurance company. D. The financial performance of the insurer's investments. Answer. B. The claims history and risk profile of the insured. Explanation. The determination of an insurance premium is primarily influenced by the insured's claims history and overall risk profile. Insurers assess the likelihood of a claim based on various factors, including the insured's previous claims, driving record, property condition, and other relevant risk indicators. By analyzing these elements, insurers can set premiums that reflect the expected cost of coverage. This practice is rooted in underwriting principles, which aim to balance risk and ensure that premiums are appropriate for the level of coverage provided. Question 10. Claims handling process. In Pennsylvania, What is the typical maximum duration within which an insurer must settle a claim after a decision to approve it? A. 10 days. B. 30 days. C. 60 days. D. 90 days. Answer: B. 30 days. Explanation: once an insurance claim is approved in Pennsylvania, the insurer is typically required to settle the claim within 30 days. This requirement is part of consumer protection laws aimed at ensuring that claimants receive their due compensation in a timely manner. Failure to adhere to this timeline can result in penalties for the insurer, reinforcing the importance of efficiency and accountability in the claims handling process. Question 11. Risk management and loss control. Which risk control strategy involves transferring the financial consequences of a risk to another party? A. Risk avoidance. B. Risk retention. C. Risk transfer. D. Risk reduction. Answer: C. Risk transfer. Explanation: risk transfer is a strategy where the financial consequences of a risk are shifted from one party to another, typically through insurance. By purchasing an insurance policy, the policyholder transfers the potential financial burden of a loss to the insurer. This strategy is critical in risk management as it allows individuals and businesses to protect themselves against unforeseen events while retaining some level of risk, such as deductibles. Understanding the various risk control strategies is vital for effective risk management and loss prevention. Question 12. Insurance contracts. In an insurance contract, what is the purpose of a condition? A. To specify the insured's duties in the event of a loss. B. To outline the insurer's obligations to pay claims. C. To define the coverage limits for the policy. D. To provide a legal framework for resolving disputes. Correct answer: A. To specify the insured's duties in the event of a loss. Explanation: conditions in an insurance contract outline the responsibilities and duties of the insured in the event of a claim or loss. These may include requirements to report losses promptly, provide documentation, and cooperate with the insurer's investigation. Understanding these conditions is essential for policyholders to ensure compliance and avoid potential claim denials. They form an integral part of the contract alongside exclusions and coverage definitions. Question 13. Specific types of casualty insurance. Which of the following statements accurately describes the purpose of umbrella insurance? A. It provides coverage for specific high-risk activities. B. It fills gaps in liability coverage beyond standard policies. C. It is designed to cover personal property losses exclusively. D. It replaces primary auto insurance policies. Answer: B. It fills gaps in liability coverage beyond standard policies. Explanation: umbrella insurance is designed to provide additional liability coverage beyond the limits of standard insurance policies, such as homeowners or auto insurance. It acts as a safety net, covering large claims that could exceed the underlying policy limits. This type of insurance is crucial for individuals with substantial assets to protect, as it helps mitigate the risk of financial loss due to lawsuits or significant claims. Understanding the role of umbrella insurance can significantly enhance a policyholder's overall risk management strategy. Question 14. Ethics in insurance. An insurance agent offers to lower the premium for a client by omitting certain coverage details from the policy. This action is an example of A. Ethical behavior. B. Fraud. C. A common practice in the industry. D. Risk management. Answer: B. Fraud. Explanation: the agent's action of omitting coverage details to lower the premium constitutes fraud, as it misleads the client about the true nature of the insurance coverage. Ethical responsibilities in the insurance industry require transparency and honesty in all dealings. Agents must ensure that clients are fully informed about their policies, including any limitations or exclusions, to avoid liability and maintain professional integrity. Engaging in fraudulent practices not only jeopardizes the agent's license but also erodes consumer trust in the insurance industry. Question 15. Claims handling process. During the claims handling process, an insurer must conduct an investigation. What is the primary goal of this investigation? A. To delay the claims process. B. To determine the validity and extent of the claim. C. To inform the policyholder of their rights. D. To prepare for potential litigation. Answer: B. To determine the validity and extent of the claim. Explanation: the primary goal of an investigation during the claims handling process is to determine the validity and extent of the claim. This involves gathering evidence, interviewing witnesses, and assessing damages to ensure that the insurer is fulfilling its obligations under the policy. A thorough investigation is essential for making informed decisions about claims payouts and maintaining fair practices. It also helps prevent insurance fraud, ensuring that only legitimate claims are honored. Question 16. Consumer rights and responsibilities. What is one of the key rights of policyholders in Pennsylvania regarding the claims process? A. The right to negotiate premium rates at any time. B. The right to have claims processed without any investigation. C. The right to receive a clear explanation of claims denials. D. The right to receive all claims payments within 7 days. Answer. C. The right to receive a clear explanation of claims denials. Explanation. Policyholders in Pennsylvania have the right to receive a clear explanation of claims denials, ensuring transparency and accountability in the claims handling process. This right is essential for maintaining trust between insurers and policyholders. It allows clients to understand the reasons behind a denial, which can help them make informed decisions about potential appeals or adjustments to their coverage. Understanding consumer rights is vital for policyholders to advocate for themselves effectively. Question 17. Underwriting principles. Which factor is most likely to affect an insurer's underwriting decision? A. The insured's favorite color. B. The insured's family history. C. The insured's occupation and risk exposure. D. The insured's social media presence. Answer. C. The insured's occupation and risk exposure. Explanation. An insured's occupation and risk exposure are critical factors in underwriting decisions. Certain occupations carry higher risks, which can influence the insurer's assessment of the potential for future claims. For example, individuals in high-risk jobs like construction may face higher premiums due to increased likelihood of accidents. Understanding underwriting principles is essential for policyholders as it helps them recognize how their personal circumstances affect their insurance options and costs. Question 18. Casualty insurance basics. Which of the following is NOT typically covered by general liability insurance? A. Bodily injury to third parties. B. Property damage to third parties. C. Professional errors and omissions. D. Advertising injury. Answer. C. Professional errors and omissions. Explanation. General liability insurance typically covers bodily injury, property damage, and advertising injury related to the insured's business activities. However, it does not cover professional errors and omissions, which fall under professional liability insurance. Professionals, such as doctors or lawyers, need specific coverage to protect against claims arising from their professional services. This distinction is crucial for businesses to ensure they have adequate coverage for all aspects of their operations. Question 19. Insurance pricing and premiums. What is the purpose of using loss ratios in insurance pricing? A. To determine the geographic area for underwriting. B. To assess the profitability of an insurance policy. C. To estimate the operational costs of the insurance company. D. To establish marketing strategies for new products. Answer. B. To assess the profitability of an insurance policy. Explanation. Loss ratios are used to assess the profitability of an insurance policy by comparing the amount paid in claims to the premiums collected. A high loss ratio indicates that a significant portion of premiums is being paid out in claims, which may suggest that the policy is not profitable for the insurer. Conversely, a low loss ratio indicates that the insurer is retaining a larger share of premium income. This analysis is essential for insurers to set competitive pricing while ensuring financial viability. Question 20. Current trends and issues in insurance. Which of the following is a current trend impacting the insurance industry in Pennsylvania? A. Decreased consumer awareness of insurance products. B. Increased automation in claims processing. C. Decreased reliance on technology for underwriting. D. A growing number of insurance agents entering the market. Answer. B. Increased automation in claims processing. Explanation. Increased automation in claims processing is a significant trend impacting the insurance industry, including Pennsylvania. Automation can improve efficiency, reduce processing times, and enhance the accuracy of claims handling. As technology advances, insurers are increasingly utilizing software and artificial intelligence to streamline operations and provide better service to clients. This trend reflects a broader movement toward digital transformation in the insurance sector, making it essential for professionals to stay informed about technological developments. Question 21. Types of coverage. Which of the following insurance policies provides coverage for damages resulting from the insured's negligent acts or omissions? A. Property insurance. B. Liability insurance. C. Life insurance. D. Health insurance. Answer: B. Liability insurance. Explanation: liability insurance is designed to protect individuals or businesses from claims arising due to negligent acts or omissions that result in bodily injury or property damage to a third party. It covers legal costs and any settlements or judgments against the insured. Understanding the different types of insurance coverage is essential for policyholders to ensure they have the appropriate protections in place. Question 22. Policy exclusions. Which of the following is typically considered an exclusion in most general liability insurance policies? A. Damage caused by intentional acts. B. Injuries to employees during work hours. C. Property damage caused by the insured's products. D. Advertising injury claims. Answer: A. Damage caused by intentional acts. Explanation: most general liability insurance policies exclude coverage for damages caused by intentional acts, as this would contradict the fundamental purpose of liability insurance. Coverage is intended for accidents and unintentional injuries. Other exclusions commonly include injuries to employees, which fall under workers' compensation, and certain contractual liabilities. Understanding these exclusions helps policyholders recognize the limitations of their coverage. Question 23. Regulatory compliance. In Pennsylvania, what is the maximum fine an individual can face for operating as an insurance agent without a valid license? A. $1,000. B. $5,000. C. $10,000. D. $25,000. Answer: B. $5,000. Explanation: in Pennsylvania, individuals who operate as insurance agents without a valid license can face a maximum fine of up to $5,000. This regulation is in place to protect consumers and maintain the integrity of the insurance industry. Licensing ensures that agents have the necessary training and knowledge to provide accurate information and services to policyholders. Question 24. Policy limits. What does the term aggregate limit refer to in liability insurance policies? A. The maximum amount the insurer will pay for a single claim. B. The total amount the insurer will pay for all claims during the policy period. C. The amount of premiums paid by the insured. D. The total coverage for property damage only. Answer: B. The total amount the insurer will pay for all claims during the policy period. Explanation: the aggregate limit in liability insurance refers to the maximum amount the insurer will pay for all covered claims within a specified policy period, usually 1 year. This limit differs from the per occurrence limit, which is the maximum amount payable for a single claim. Understanding policy limits is crucial for policyholders to ensure they have adequate coverage for their needs. Question 25. Claims process. In the event of a claim, what is the first action a policyholder should take according to most insurance policies? A. Contact an attorney. B. Notify the insurance company promptly. C. Begin repairs immediately. D. File a police report. Answer: B. Notify the insurance company promptly. Explanation: the first action a policyholder should take in the event of a claim is to notify the insurance company promptly. Timely notification allows the insurer to begin the claims process and ensures that the policyholder fulfills their contractual obligations. Many policies require notification within a specific time frame to avoid complications with claim payments. Understanding the claims process helps policyholders act effectively when losses occur. Question 26. Underwriting practices. Which factor is least likely to influence the underwriting decision for a personal auto insurance policy? A. The driver's history of traffic violations. B. The type of vehicle being insured. C. The insured's marital status. D. The insured's favorite sports team. Answer: D. The insured's favorite sports team. Explanation: an insured's favorite sports team is irrelevant to the underwriting decision for a personal auto insurance policy. Underwriters typically consider factors such as driving history, vehicle type, and demographic details like marital status. These factors can indicate risk levels and help insurers determine appropriate premiums. Understanding the underwriting process enables consumers to grasp how their personal information impacts insurance rates. Question 27. Insurance fraud. An insurance adjuster discovers that a policyholder has provided false information regarding their property value during the application process. This situation is an example of A. Misrepresentation, B. Material omission, C. Fraud, D. Negligence. Answer: C. Fraud. Explanation: providing false information regarding property value constitutes fraud as it involves intentional deception to secure an insurance benefit. Insurance fraud is a serious offense that can lead to legal consequences, including denial of claims, policy cancellation, and potential criminal charges. Understanding the implications of fraud is essential for both policyholders and insurers to maintain the integrity of the insurance process. Question 28. Statutory provisions. Under Pennsylvania law, which of the following is required for an insurer to conduct business in the state? A. Registration with the Secretary of State. B. A certificate of authority. C. A minimum amount of capital reserves. D. A bond from a licensed agent. Answer: B. A certificate of authority. Explanation: in Pennsylvania, insurers must obtain a certificate of authority from the state insurance department to conduct business legally. This certificate ensures that the insurer meets all regulatory requirements and has the financial stability to fulfill its obligations to policyholders. It is crucial for consumers to deal with licensed insurers, as this protects them from fraudulent practices. Question 29. Insurance coverage. Which of the following types of insurance provides coverage for losses resulting from professional services rendered by a healthcare provider? A. General liability insurance. B. Professional liability insurance. C. Property insurance. D. Workers' compensation insurance. Answer: B. Professional liability insurance. Explanation: professional liability insurance, also known as errors and omissions insurance, provides coverage for losses resulting from the professional services rendered by healthcare providers and other professionals. It protects against claims of negligence, malpractice, or failure to deliver promised services. Understanding the different types of insurance available is crucial for professionals to ensure they have adequate coverage against potential claims. Question 30. Dispute resolution. If a policyholder disagrees with an insurer's claims decision, what is the first step they should typically take to resolve the issue? A. File a lawsuit. B. Request a formal hearing. C. Appeal the decision with the insurer. D. Contact the state insurance department. Answer: C. Appeal the decision with the insurer. Explanation: the first step a policyholder should typically take if they disagree with an insurer's claims decision is to appeal the decision with the insurer. Most insurance companies have an internal appeals process that allows policyholders to present additional information or arguments regarding the claim. This process can often resolve disputes without the need for legal action or involvement of regulatory agencies. Understanding the dispute resolution process helps policyholders navigate potential conflicts effectively.